I started a new short natural gas trade today, and I let my members know when I was doing it. I've shared with you for days that I thought if natural gas could come up to $3.94 a cubic foot and not break higher, it could be a great level to go short, and I did. The trade almost immediately worked out really well, and you can see how far it came down, and then oil and natural gas came back up today when this afternoon the Israelis said that the U.S. might bomb the underground enrichment facilities of Iran, which I don't believe for a second will happen, but I can be wrong, and let me expand on this. I realize I'm showing you here the S&P 500 SPX, but on the SPY, the exchange traded fund, all morning there was a lot of buying power at 600, and there was a lot of selling pressure at 600 too. So the market traded in a very tight range today until early on in this afternoon, again when the Israelis said that the U.S. might bomb the enrichment facility over in Iran, which again, I don't think they're going to do because that would just open up a humongous can of worms. I also don't think it's going to happen because oil did not go through the roof, gold did not go through the roof, and the stock market did not crash. If the market really thought we were going to bomb that facility, I think we would have had a completely different market today. Now, I'm not complaining because I am short the stock market here, and specifically on the SPX S&P 500, again, all my points remain the same from yesterday. My target high there of 60.30, that is absolutely still in effect. Came down nicely so far today. Let's see where we end. I still say we can come down then to point number 2, my first target low at 5,810. We could then have a little dead cat bounce up to point number 3, up to about 5,880, before falling again to point number 4, my second target low at about 5,770. Watch these levels. Here's gold pretty much flat on the day as of about 2:30 this afternoon. Now, do you really think if the U.S. was really going to drop bombs on Iran, that gold wouldn't be through the roof? I think it would be. That's why, one reason why I don't think we bomb Iran. As of about 2:30 this afternoon, yes, the price of crude oil was certainly higher. But again, if the U.S. was actually going to bomb Iran, I think it would be through the roof here. It would certainly be higher than it was last week, Friday, when even a little bit of news came out. But anyway, as of 2:30, U.S. oil is making 2 unconfirmed breakouts. The first above $70.30 a barrel, the second above $72.34 a barrel. Let's let the evening go by. Let's let tomorrow morning come over. Let's let what I think are overdone headlines sort of calm. And I personally think that oil comes back down. But sure, oil being up today is not good for my short crude oil position. The 10-year yield was down today, at least as of about 2:36 this afternoon. Still in that confirmed breakdown range between 4.43% and 4.32%. So far, we could not confirm the breakout higher above 4.43%. I also kind of think with lower yields today, it is another thing showing me that the U.S. is not going directly to war with Iran. If you're paying attention, you know that I have been sharing with you that if Bitcoin could come back up to the scene of the crime at about $108,555 a coin and not confirm above, it could be a good place to go short. I was right, but to my knowledge, the only way you can short Bitcoin is through ETFs. So with the market closed after 4 and it doesn't open until 9:30 in the morning, Bitcoin had already reached that level that I was saying to possibly start a new short position and already began to come back down after hours. So I was right, but I couldn't start a new short position because, again, to my knowledge, you can't short Bitcoin after hours. More data showing that the economy is slowing. Retail sales fell 0.9% in May after the small decline that we saw in April. If we do take out autos and gasoline, then I get it. Retail sales only fell 0.1%, and we can argue if you should take out auto sales and gasoline or not. I'm not here to argue that. I'm just here to share the facts with you. Possibly one of the most important facts of the May retail sales is that restaurant sales dropped almost 1%, the largest decline in more than 2 years. What happens when mom and dad have less money to spend? They're getting less time at work. They even lose their jobs. The economy is slowing, or they're in fear of the economy slowing further or losing their jobs. What do? They slow down on their discretionary spending. Restaurant spending is discretionary spending. I think this is another clue that the economy is slowing. Be careful. Even though the economy continues to slow, tomorrow afternoon at 2 o'clock, I believe that the Federal Open Market Committee will hold rates steady. I do not think they cut. They always are so data dependent, and I don't think they cut. The Fed is no friend. At least Jerome Powell is also, I don't believe, any friend of Donald Trump. So my expectation for tomorrow afternoon, when Jerome Powell comes out and what I think will be a hawkish tone, meaning not cutting, wanting to hold rates where they are, I think the stock market can fall further tomorrow. That would be great for my short positions. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.